It's Brian Preston, the money guy.
All right, let's move on to Cody's question. He says, my brother-in-law's longtime friend just sold him some whole life insurance. He is 26. He's saying, in my opinion, I'm thinking it might be my place to lightly bring up that whole life insurance is not a good deal for him. So what do you think about that? And what should I focus on why this is the case if he does decide to bring this up?
By the way, Bo, brilliant, well played, Cody. You can edit this part. Just make sure you take out the first 10 seconds because you can just give them a link to this. Just make sure you curate the first 10 seconds so they know it's not you asking, but maybe you're using an alias on this thing.
Oh, I saw this video. Wow, you should answer this.
Because we all have somebody. That's why I loved it. Of course, there's a brother-in-law in this story. I mean, of course there's a brother-in-law. And Bo, you can give color to this, is that because I had a college roommate who then was an adult roommate, and he's turned out tremendously successful now, but he went through a period where he was in the financial world, and I knew that he must have been on desperate times when he was calling to try to sell me stuff. I'm like, dude, I'll see you tonight. Why are you trying to sell me a product?
Yeah.
You know, when we live in the same apartment together, you know, but I could tell he was in a desperate situation where he's cold calling. And just coincidentally, my mother-in-law texted me this morning and goes, hey, I just got a call from a Merrill Lynch guy, UGA grad. He wanted to know if I was interested in getting a second opinion on his portfolio. And her comment was, are they so hard up that they're cold calling, people?
Yeah.
And I was like, yes, that's exactly. So it's not uncommon. The majority of the financial space is salespeople. So you better have a really big understanding of what the why and what it can do for you, because products, especially like whole life, and I'm going to let Bo kind of give you the meat on this because he actually worked in this industry for a brief period of time, but whole life is very profitable for the person that sells it. So, Bo, with that, give Cody your thoughts.
Yeah, Cody, if I were going to be talking with my friend about this, and he's 26 years old, I'd say, hey, first of all, why are you buying life insurance, right? And you need to figure out what the answer is, because the reason that life insurance exists is to protect the lost income of someone, right? So if this 26-year-old is married or has kids or has debt obligations or has someone who's depending on their income, and if they weren't here, that person would be disadvantaged because of that, then they have an insurable need on their life. You can justify it. I know for a lot of 26-year-olds, they're just young and single and not married, and no one is dependent upon them. So first I would say, okay, why did you buy life insurance? Now let's assume that there's a justifiable reason. Oh, I've got a wife and I've got kids, or I've got these things going on. Well, then it's okay, well, how'd you decide on how much I need? And you kind of go through it. So, I need $1 million in coverage. Okay, great. You land on whole life. How much does it cost? And it's going to be some number that's way up here.
It's going to be a 5-figure number.
It's going to be a big number.
It's going to be a big number. Maybe, yeah, it's going to definitely be don't you think it's going to be a 4 to 5 figure number easily?
Yeah, for sure.
It's going to be in the thousands of dollars.
Meanwhile, for that same amount of insurance coverage, because that's what we're talking about here, insurance, that person could go out and buy $1 million policy for a couple $100. We're talking about
a few $100.
3-digit numbers now, right? And say, okay, hey, friend, why did you opt to pay this much more for this thing that you could have got for this much? Well, then they'll start talking about, well, yeah, but I can build up cash value and I can invest it and it can grow. Say, hey, guess what, man? You can build up value in an investment account on your own and grow it without having the life insurance structure. This goes, oh, no, but this is tax-free. Hey, you know what? So a Roth IRA is actually tax-free, and then you can put money in like a 401k or not. That's actually tax-deferred. But when you get to the end of this insurance product thing, you build up all this cash value, and you ask the insurance agent, hey, how do I get to this? How do I get this money back out? You got to borrow it. You got to borrow it from yourself, and you have to make sure that you leave enough value inside of the policy for eternity so that it does not lapse, or else all those distributions that you borrowed from yourself would end up causing a taxable event. So you're basically betting on one thing. I will have enough money to either pay for this policy out of pocket or leave cash value in it before I die. So it's basically a race to what runs out of money first. Do I die, or does the insurance policy run out of money? Why would you set yourself up for that game? In my experience, most 26-year-olds, when you run the numbers of just buy super low cost, high coverage term, you take the difference in premium, you build that wealth somewhere else in some type of account. In the majority of circumstances where we run this, you come out advantageous. So if I were talking to your friend, I would do the Socratic method. I would just start asking him or her questions. Hey, why'd you do this? Oh, what about that? Well, hey, why'd you do this? Oh, what about that? Not trying to tell them to change their mind, but trying to coach them to see if they arrive at a different conclusion once they've worked through those things.
I think to give it steps and structure, Cody, if you actually just went to moneyguy.com/resources, download the free financial order of operations, and just start pointing at boxes. Be like, hey, I know that insurance policy is costing you this many thousands of dollars a year. Have you funded, what do your emergency reserves look like? Are they in a good place? Man, your emergency reserves aren't full, but you're paying that many thousands of dollars a year for this. What happens if you lose your job?
Yep.
I mean, because how about Roth? That's tax free. Have you funded that or the HSA? How about, even your employer match? If you find out, because what I find for 30-somethings, 20 and 30-somethings, is that you have that messy middle. I mean, especially once you get married, you start having children. There are so many things reaching into your back pocket or your purse to try to get to your money. You don't have enough to spread it out all over the place. So when you start comparing, hey, I've got thousands of dollars going to this insurance policy that I could probably cover the exact same thing for $400 a year. Man, that money would be better used if I could actually spread it out to all these other pots, like my Roth IRA, my emergency reserves, so that I'm building wealth. Because I always remind people, what insurance companies, what do you think they do with that cash value and other stuff? They go and invest it.
It's a very common sense question.
So now you have to ask yourself, what do I cut down the headwind of the cost? Because the insurance company, I know the commission that they're charging is very large. They have to pay out a sales force. I know that they got really fancy people that are out there doing all the investing, and they can't be cheap. So there's just a lot of headwinds that are getting hands in the cookie jar. And there's nothing wrong with permanent life insurance. I've actually used it. It's just that the lion's share of majority of the population doesn't make it through the financial order of operation or reach the level of success where they should be using permanent insurance. That's the problem, is that there really is a percentage of the population that benefits from permanent insurance, but it's not the majority. It's not the lion's share. It is the exception, and that's where the majority of people selling life insurance are pitching products to people that would probably be better served getting the coverage at the most affordable price possible, and then using the rest of the money, investing the difference or using the money elsewhere for a better cause to their financial life.
Hey, good on you though, Cody, for wanting to take care of your friends. That's awesome. Good for you for caring about the well-being of your folks. I love that.